Ever feel like money just vanishes?
Yeah.
Like you're working hard but getting nowhere financially.
It's a trap a lot of us fall into.
But what if, instead of being stressful, money was a tool,
Yeah.
a key that unlocked opportunities?
That's the power of financial literacy.
And that's what we're diving deep into today.
It's wild how many people were never really taught about managing money.
Right.
It's like we get these complex financial systems but no instructions.
Exactly. And so that's why we're breaking down the 4 pillars of financial literacy today.
Okay.
Budgeting, investing, taxes, and saving for the future.
Sounds good.
And we're using Financial Literacy 101, budgeting, investing, taxes, and saving for the future as our guide.
You know, this book makes a really good point. Financial literacy isn't just about numbers. It's about peace of mind, about opportunity.
Yeah, about shaping your future.
Exactly.
Okay, so first up, budgeting.
Okay.
Don't groan.
I know.
Think of it like this.
Right.
A budget isn't about restricting yourself. It's about giving your money a purpose.
Right.
It's about being intentional.
Absolutely. And the book actually points out this crazy statistic. 65% of Americans don't even have a budget.
Wow.
Which, makes sense why so many people feel lost with their finances.
It's like trying to drive somewhere without a GPS.
A budget's your map, your compass, your financial GPS.
So how do we create this magical budget?
Well, first we got to track where our money's going.
Okay.
For a whole month, write down every single thing you spend money on.
Every cup of coffee, every online impulse buy.
Even that late-night pizza.
Everything.
And what's so interesting is just tracking your spending can be super eye-opening.
Oh, yeah.
You start to see patterns in your spending.
Right. And you start to see where you might be wasting money.
Exactly. Knowledge is power.
And once you know where your money's going, you can start to decide where you want it to go.
Yeah.
What are your goals?
Yeah, what are you hoping to achieve?
A budget is how you make those dreams happen.
And there are so many different budgeting methods out there. One popular one is the 50-30-20 rule.
Okay, break that down for me.
So 50% of your income goes to needs.
Rent, groceries, bills.
Exactly, the essentials. Then 30% goes towards wants.
Entertainment, travel.
The fun stuff.
Got it. And the last 20%.
That's for savings and paying off debt.
Building for the future.
Right.
I know what some people might be thinking. Budgeting sounds restrictive and, honestly, kind of boring.
Well, think of it this way.
Okay.
Imagine you're building a rocket.
All right.
Each part of your budget is a different fuel tank.
Got it.
You get to decide which tanks get filled, with how much fuel, and in what order.
That's a great analogy. So instead of limiting you, a budget gives you control.
Exactly. It lets you decide what matters most.
Plus, there are all sorts of tools to make budgeting easier.
Oh, yeah. From budgeting apps to spreadsheets.
You can find what works best for you. All right. So before we blast off to our next topic, I want to know, what are some of your financial goals? What could a budget help you achieve?
Think about that for a minute.
While you do, we'll get ready to explore investing.
Where your money doesn't just sit there.
It starts to grow.
Exactly. So we've covered a lot.
Yeah.
Budgeting, investing, even taxes.
And saving for the future.
Yeah.
Especially retirement.
Right. But how much do we actually need to save for retirement?
I know. It can feel so far off.
Yeah.
It's like, I'm barely making ends meet NLW. How am I supposed to save for something decades away?
Exactly.
And plus, how much is enough?
Yeah, good question.
It all feels very mysterious.
It can definitely seem that way.
So how do we solve this mystery?
Well, luckily, we have tools to help figure it out.
Okay, like what?
One of the most useful is retirement calculators.
Retirement calculators.
Yep, you can find them online.
What do they do?
They help you plan for retirement, and they take a lot of the guesswork out of it.
So are these calculators like financial fortune tellers?
Not quite fortune tellers.
Okay.
But they do use information about you.
Like what?
Like your age, your income, your lifestyle.
To figure out how much money I'll need.
Yeah, they use that info to estimate how much you'll need to retire.
So it's kind of like a financial crystal ball.
Kind of, but it's based on data and algorithms, not just random predictions.
So it's more reliable.
Definitely. And these calculators can really show you just how important it is to start saving early.
I've heard that.
You know, the sooner you start saving, the less you'll need to put away each month.
Because of compound interest.
Exactly.
Compound interest is like magic.
It really is. It's like a time machine for your money.
So starting early is like setting the destination on our time machine to Financial Freedom Island.
Exactly.
Love it.
And don't forget about things like 401k.
Those retirement plans from work.
Right, because a lot of employers offer matching contributions.
So if I put money in, my employer will put money in too.
Yep. It's basically free money.
Free money. Sign me up. Okay, so we've talked a lot about the technical side of money.
Yeah.
But we haven't really touched on the emotional side.
Which is actually super important.
It is, because money and emotions are totally connected.
Yeah, sometimes they work together.
And sometimes they clash.
Exactly. And this is where things get really interesting.
All right, I'm intrigued.
Our relationship with money is so personal.
Yeah, everyone's different.
Right. It's affected by how we grew up, by our experiences, even our culture.
It shapes how we think about money.
And how we spend it.
And how we save it.
It's like everyone has their own unique money story.
That's a great way to put it.
And understanding your own money story is so important.
Why?
Well, some people have what's called a scarcity mindset.
They're always worried about not having enough.
Right. And then other people have an abundance mindset.
Where they believe there's plenty to go around.
Exactly.
I can see how those different mindsets would affect your finances.
Oh, definitely. Because if you're always operating from a place of fear, you're going to make different financial decisions.
Right. And you might even hold yourself back financially.
Exactly. So it's really important to develop a healthy relationship with money.
I like that.
It's about figuring out your own money story.
Yeah, recognizing those limiting beliefs.
Right. And then you can start making decisions that are actually aligned with your goals.
So it's about looking inward.
It is.
And being honest with yourself about your relationship with money.
And if you're struggling with that, don't be afraid to ask for help.
Yeah, that's important.
There are therapists and counselors who specialize in the emotional side of money.
So it's like having a therapist for your money and for your mindset.
Exactly.
Cool.
Now, let's talk about setting financial goals.
Okay.
Because this ties into our emotions and values.
I see that.
Setting goals helps give your financial journey direction.
So it's less about wandering aimlessly.
Right. It's about creating a clear plan.
And how do we do that?
Well, you want to set SMART goals.
SMART goals.
Yeah, it stands for specific, measurable, achievable, relevant, and time-bound.
Okay, break that down for me.
So specific means you need to define exactly what you want.
Got it.
Measurable means you need a way to track your progress.
Okay.
Achievable means your goals need to be realistic.
Right, we want to set ourselves up for success.
Exactly. Relevant means your goals should align with your values.
What matters most to you?
Right, and time-bound means you need to set deadlines.
Okay, so these SMART goals are kind of like a blueprint for financial success.
Exactly, they give you the structure.
And then it's up to you to take action and make those goals happen.
Exactly, and remember, don't be afraid to dream big.
Yeah.
Do you want to buy a house, start a business, retire early?
Those are all great goals.
So go for it. Setting big goals can really open up possibilities you might not have even considered before.
So we have our financial GPS from our budget.
Right.
We have our rocket fuel from investing. And we have our roadmap from our goals.
Yeah, but what about the obstacles we're bound to run into along the way?
The financial roadblocks.
Exactly. So let's talk about managing debt.
Okay.
Because debt can be a big source of stress.
Absolutely.
It can prevent you from reaching your goals.
Yeah, it can feel like you're constantly trying to catch up.
It's like you're carrying around this heavy backpack.
Weighing you down.
Exactly. So the first step is to understand the types of debt you have.
Okay, so like credit cards, student loans.
Personal loans, those are the big ones.
Got it.
Because each type of debt has its own interest rates and its own kind of nuances.
So it's like each type of debt is a different monster in a video game.
Ooh, I like that analogy.
You need a different strategy to defeat each one.
Exactly. Now, one popular debt management strategy is the debt snowball method.
Okay, tell me about that.
So with the debt snowball, you focus on paying off your smallest debts first.
Okay.
Regardless of the interest rate.
Got it. Why the smallest ones first?
It's about building momentum. You know, as you start paying off those smaller debts, you start to feel more motivated to tackle the bigger ones.
It's like clearing those smaller obstacles out of the way.
Yeah. And you gain confidence to keep going.
I like it.
Now, another approach is the debt avalanche method.
Okay, what's that one?
With this one, you focus on paying off the debts with the highest interest rates first.
Oh, I see.
So this one saves you the most money in the long run.
So with our video game analogy, it's like defeating the monster that's doing the most damage.
Exactly. So you're minimizing the damage overall.
Yeah, smart. Are there other options?
There are. You might want to look into debt consolidation.
What's that?
It's basically combining multiple debts into one.
Okay.
So it can simplify your payments.
And potentially lower your interest rates.
Exactly. So you might consider a balance transfer or a personal loan to consolidate your debts.
So it's like merging those multiple monsters from the video game into one bigger, more manageable monster.
Yeah, exactly. So it's a little less overwhelming.
I like it. And again, don't be afraid to ask for help.
Yeah, there are financial advisors and credit counselors who can be really helpful.
So it's like having a mentor in your corner helping you fight those debt monsters.
Exactly. Okay, now let's move on to credit.
Okay.
Your credit score is super important.
It is.
It's basically a number that tells lenders how responsible you are with money.
So it's like a financial report card.
Yeah. It tells them if you're likely to pay back a loan on time.
And a good credit score opens doors.
It does. You can get better interest rates on loans, better credit card offers, even better insurance premiums.
So it's like a financial passport.
I like that. It gives you access to better opportunities.
So how do we build good credit?
Well, it takes time and effort.
All right.
You need to build good habits, like paying your bills on time.
Always good advice.
Right. And keeping your credit card balances low.
So don't max out your credit cards.
Exactly. And it's good to have a mix of different types of credit.
Okay, like a credit card and a loan.
Yeah, just to show lenders that you can manage different types of credit responsibly.
So it's like building a strong financial resume.
I like that. And speaking of resumes, you should check your credit report regularly.
Oh, yeah, I've heard that's important.
It is, because it helps you catch any errors.
And you can make sure your credit score is accurate.
Exactly. You can get a free credit report from each of the credit bureaus every year.
So it's like a free annual checkup for your credit.
Exactly. Now, let's go back to investing.
Oh.
We touched on it earlier, but there's so much to learn.
I feel like I'm ready to blast off into the investment galaxy.
Perfect. Let's start with the basics.
Okay.
There are a lot of different ways to invest.
Mm.
You know, savings accounts, CDs,
Stocks, bonds.
mutual funds. It's a whole world.
It is. And, like, each one has its own level of risk, right?
It does.
So some are safer than others.
Right. And some have the potential to make you a lot more money.
But they're also riskier.
Exactly. So you got to choose the right investments for your situation.
So it's like choosing the right spaceship for your financial journey.
Exactly. And just like with spaceships, you want a diversified portfolio.
Right. Don't put all your eggs in one basket.
Spread those investments across different asset classes, stocks, bonds, real estate. It helps manage risk.
It's like having a fleet of spaceships.
Right. Each one with different strengths and capabilities.
And investing can get pretty complicated, right?
It definitely can be.
So it's okay to ask for help from a financial advisor.
Absolutely. They can be super helpful in guiding you through the complexities.
It's like having mission control for your financial spaceship.
Exactly. Okay, as we wrap up this section, let's talk about protecting your assets.
Okay.
You know, once you start building wealth, you want to make sure it's secure.
So it's like installing a security system for your financial fortress.
Yes. Insurance is a big part of that.
Health insurance, car insurance.
Homeowners insurance.
Right, because they protect you financially if something unexpected happens.
Exactly. And estate planning is also really important.
What's that?
It's about making sure your assets are distributed the way you want them to be after you're gone.
That makes sense.
So this involves things like creating a will, setting up trusts, and making sure you have beneficiaries for your accounts.
So it's like making sure your financial legacy reaches its intended destination.
I like that. And don't forget about cybersecurity.
That's important too.
Especially these days.
So much happens online.
It is. You really need to protect your financial information.
So it's like installing a firewall for your financial spaceship.
Exactly. You want to protect it from cyber attacks.
I like it.
Protecting your assets is an ongoing mission.
So we have our spaceship.
We do.
It's fueled up and ready to go.
Yep. We've got our course charted with our goals.
And we even have a security system to keep us safe.
What else could we possibly need?
Exactly.
Well, we need to talk about insurance and estate planning.
So we've covered so much.
We have.
Budgeting, investing, taxes, even how to handle debt.
But beyond all the strategies and tools, there's this bigger picture we need to talk about.
What do you mean?
Affects our overall well-being.
Oh, yeah, I can definitely see that.
Like when you feel like you're in control of your finances.
You feel less stressed overall.
Exactly. It can really impact other areas of your life in a positive way.
It's kind of like finally cleaning out that closet that's been overflowing for years.
Yeah.
You just feel lighter, more organized.
Right. Except in this case, it's your finances that are sparking joy.
I love that. But I can also see how the opposite is true, too.
Oh, yeah, absolutely.
If your finances are a mess, that stress can spill over into other areas of your life.
Definitely. It can affect your relationships, your work, even your health.
So financial literacy isn't just about hitting a certain number in your bank account.
It's about so much more than that.
It's about creating a life with more freedom.
More opportunities.
And less stress.
Exactly.
So it's not just about the what of your goals.
It's also about the why.
Why are these financial goals important to you? What will they allow you to do with your life?
Yeah, what are you hoping to unlock?
Exactly.
Right.
Is it about early retirement? Is it about travel? Is it about just having the security to pursue your passions without worrying about money?
For everyone, it's going to be different.
But the first step is figuring out what financial freedom means to you.
Absolutely. And then you can use these tools we've been talking about.
Right, to make those dreams a reality.
Exactly. Now, let's talk about financial advice.
Okay.
Because it can be overwhelming trying to figure out what advice to follow.
Yeah, it can feel like everyone's trying to sell you something.
It's true.
And it's hard to know who to trust.
It is.
Yeah.
So you got to be careful who you listen to.
So how do we navigate that? How do we know when we need financial advice? And how do we find the right people?
Well, think of it like building a team of experts.
Okay.
Like you might want to consult with a financial advisor.
For things like investing and retirement planning.
Exactly. A financial advisor can help create a personalized plan for you.
So they take into account your individual goals and circumstances.
Exactly. It's like having a financial coach in your corner.
I like that. But I've heard financial advisors can be expensive.
They can be. And their fees can vary, so it's really important to understand how they're compensated.
Okay.
And you should definitely shop around to find an advisor who's the right fit for you.
Do you have any advice on how to do that?
Well, don't be afraid to ask a lot of questions.
Okay.
About their experience, their approach, even their values.
Make sure they align with yours.
Exactly. It's like interviewing someone for a job.
You want to make sure they're the right fit for your team.
Exactly. And remember, there are a ton of free resources out there, too.
Oh, yeah, like what?
Websites, books, podcasts.
There's a lot of information available.
There is, but you have to be careful.
Right. Not everything you read online is true.
Exactly. So always double-check information and make sure it's coming from a reputable source.
So it's like fact-checking your financial news feed.
Yes, and don't underestimate the power of community.
What do you mean?
Connecting with others who are also on this financial journey can be really helpful.
Oh, I see.
You can share tips, you can learn from each other's mistakes, you can even hold each other accountable.
Like a financial support group.
Exactly. You can cheer each other on and celebrate your successes together.
I love that.
And I think it's important to remember that financial literacy doesn't have to be about deprivation.
You don't have to live like a monk to be financially secure.
Exactly. In fact, when you're in control of your money, it can actually open up a world of enjoyment and fulfillment.
Now that sounds like a financial philosophy I can get behind.
Yeah. Like maybe you want to travel more or spend more time with loved ones.
Maybe you want to pursue a passion project.
Financial freedom gives you the flexibility to do those things.
It's like giving yourself permission to enjoy the results of your hard work.
Exactly.
So we've come to the end of our deep dive into financial literacy.
It's been quite a journey.
It has. And I'm feeling so much more informed and empowered.
Me too.
And I hope our listeners are feeling the same way.
I hope so too.
So as we wrap things up, I want to leave everyone with this final thought.
Yeah.
Money is a tool. It can be used for good or for bad.
It can be used to build or to destroy.
And ultimately, your knowledge and choices determine how it shapes your life.
So what will you create with your newfound financial literacy?